So it seems the US dollar is having a bit of an identity crisis. A really stunning new analysis argues that the world's reserve currency, it's no longer being treated as this protected global asset. Instead, it's become a political tool. Today, we're going to break down exactly what that means, and maybe more importantly, how the rest of the world is responding in ways that could totally reshape the financial landscape.
Okay, let's just dive right in. For decades, for most of our lifetimes, the entire global financial system was built on a really simple promise. The dollar was the stable, neutral bedrock. It was like the operating system for the world's economy, and it was protected by the US. But this new research, it asks a pretty provocative question. And that question, it really gets to the heart of the issue. A fundamental shift, a total inversion, has happened. The dollar, which was once this shield protecting global commerce, is now, according to this analysis, being wielded like a sword. And that one change, well, it completely rewrites the risk calculation for every central bank, every major corporation, and every single investor on the planet.
To really get our heads around this, the analysis lays out this powerful dual thesis. It's arguing that the dollar isn't just facing one threat. No, it's actually getting hit from two completely different directions at the exact same time. The report calls it a dual abuse. Okay, so on one side, it's being actively weaponized for foreign policy. And on the other, it's become a victim of its own country's domestic spending habits. It's this 1-2 punch that's forcing this massive global repricing of risk. So let's start with the first part of that combo, how the dollar is being used as a weapon. What's so fascinating here is the clear pattern of escalation that this research uncovers. This didn't happen overnight. It started kind of small, with things like kicking around out of the SWIFT messaging system. Then it ramped up, right? Targeting specific Russian banks. But 2022 was the absolute game changer. That's the moment the gloves really came off. And just to give you an idea of the scale we're talking about, it's just staggering. Over 2,500 new sanctions designations in a single year. The source argues this isn't targeted action anymore. It's evolved into what it calls sanctions-based warfare, and the dollar payment system is the main battlefield. And this was the point of no return. Seizing another country's central bank reserves, it just broke a fundamental, unspoken rule of international finance. It crossed a line. The message sent to every finance minister across the globe was crystal clear. Your dollar reserves are not your property. They are a privilege that can be taken away. In other words, your dollars are not safe. But here's the other side of that coin. The dollar isn't just being used as a weapon against others, it's also becoming a victim right at home. The analysis argues that while one hand of the government is weaponizing the currency, the other is debasing it through what it calls domestic fiscal aggression. And the report points to the One Big Beautiful Bill Act of 2025 as the main catalyst here. And you can see the impact right on the screen. Debt is soaring to 125% of the entire economy's output. The interest payments alone are eating up nearly a fifth of all government revenue. So what's the bottom line? The dollar itself is being diluted. It's losing its value from the inside out. With the national debt just rocketing towards $38 trillion, the research says the government is basically backed into a corner. It has to expand the money supply, which is just a nice way of saying print more money, just to handle its obligations. This is textbook stuff. It's a classic recipe for currency devaluation and what the source calls a crisis of confidence. So, with the dollar getting hit from all sides, you have to ask yourself, right? How is the smart money reacting to all this? Well, the global market is delivering its verdict. And the answer, this analysis finds, begins with the oldest, simplest form of money on Earth, gold. And we're not talking about some slow, steady climb here. We are talking about an incredible, accelerating rally. First, it blows past $4,000, then $5,000 with no signs of slowing down. But the crucial insight here is that this isn't just retail speculation. This is a symptom of a much deeper shift. This is what happens when central banks and major institutions start running away from sovereign debt risk. And this chart, this illustrates a truly historic moment. For the very first time, this analysis reveals central banks as a group now hold more of their reserves in physical gold than they do in U.S. government debt. Just let that sink in for a second. This isn't just hedging. It is a massive, system-wide vote of no confidence in the future of fiat currencies. But the response goes way beyond just buying up gold. Something much, much more ambitious is happening.
The analysis shows that a powerful bloc of nations, led by the BRICS Plus countries, they aren't just hedging against the old system. They are building an entirely new, parallel financial world from the ground up.
And right at the heart of this new world is a project called BRICS Pay. And its goal is stunningly direct. Create a network where member nations can trade directly with each other in their own currencies, completely bypassing the U.S. financial system and all of its political choke points.
And make no mistake, this is not some plan on a whiteboard. It is happening right now. They're already testing shared payment rails for their digital currencies. They're running pilot programs like the Bridge project to trade oil in digital yuan. This is a real working alternative being built in real time.
And that brings us to the third major global reaction that this report highlights. So beyond gold and beyond these parallel systems, the analysis points to a new and incredibly powerful trend: the institutional rush into the digital escape hatch of crypto.
In this new world, Bitcoin is no longer seen as a retail gamble. No, it's being adopted as digital gold, a politically neutral macro hedge against the debasement of government-issued money. And the numbers? Well, they really speak for themselves. A price soaring past $126,000, over $100 billion flowing into ETFs. And get this, a clear majority of traditional hedge funds are now in the game.
Yeah, this chart basically says it all. That jump in hedge fund exposure in just 1 year is profound. It just shows you how quickly and how decisively the so-called smart money is moving to get exposure to this new decentralized asset class. So, what's the big takeaway from all this? The historic gold rally, the construction of this whole BRICS Plus financial system, and the institutional stampede into Bitcoin, these are not three separate stories. They're three symptoms of a single diagnosis. The world is actively and urgently hedging against a US dollar it no longer trusts to be a neutral store of value. Ultimately, the report doesn't predict some overnight collapse, but a steady, structural decline into a more multipolar monetary world, a world where the dollar is just one of several major players on the stage. And that leaves us with the single most important financial and geopolitical question of our time. As this era of singular dollar dominance ends, what exactly comes next?